Hi, this is Dan Collins, editor-in-chief of Modern Trader magazine, coming to you live from the floor of CME Group for Traders Exclusive. Well, we've had an election since the last time we spoke to you, and the results surprised a few people. But for those of you who read the November issue of Modern Trader magazine, our election preview, I hope you did, because our analysts really hit the nail on the head. They believed the market was, pricing in a Clinton victory. So most of their analysis revolved around what would happen if Trump picked up in the polls or possibly would win. And basically what they said, it would be very bad for treasuries and there'd be a big sell-off in treasuries, which happened. Also that it would be very good for big pharmas. The IBB index rallied sharply. And that's because Clinton had made some hints that she was, would go after some of the price gouging she saw going on in the pharmaceutical industry. But most interesting now is going forward is, and I'm telling you this as Chairman Janet Yellen is testifying before Congress, is what happens with Fed funds. Everyone expected a tightening to happen in December, and after an initial shock on election night, the markets actually reversed and acted positively. So that Fed tightening, I think, is still on target. The more interesting thing is, I think most analysts expected probably two tightenings, 50 basis points for all of 2017. If you look at the Fed fund futures out to December of 2017 right now, they've sold off maybe 13 basis points since the election. They didn't even price it, they only actually priced in one tightening, not counting December, out to December 2017. So maybe just one, and then they'd wait to next December. But here's what we know. What President-elect Donald Trump has promised are a massive infrastructure build, spending, and very large tax cuts. Now, the Republicans in Congress have been amenable. Recall, they have not done anything on the fiscal side since Obama came into office and they had the initial stimulus, and pretty much has not done anything since then, leaving kind of all stimulus to the Fed. If you do get this infrastructure build, if you do get this plan passed and a tax cut, that's going to be highly inflationary, and that's got to change the Fed's outlook. So if that happens, if you look out for the rest of next year in 2018, instead of 25 to 50 basis point increases a year, assuming we don't fall into a recession, the Fed will be forced to do something very more substantial in terms of tightening. So that's a really interesting market to watch. And right now, I think there's strong opportunity in the Fed funds futures. If you look out to the end of 2017 to the end of 2018, you can see Fed funds tightening, at a much more rapid pace if these plans are passed and go into effect. So it'll be interesting to watch. This has been Dan Collins, editor-in-chief of Modern Trader for Traders Exclusive.